So first, we would be looking at logically what is Islamic finance, because from this aspect, then we would derive what are the Islamic financial institutions. Okay, so is it just another religious doctrine to provide financing for mosques, charities, or fundings for Muslim entrepreneurs? Some secularists and other critical observers, they argue that Islamic finance is just a broader political agenda, just to transform the present state of the world to be more closely to the principle of Islam. Okay, and then we can see that despite those critical observations, we have seen rapid growth of Islamic finance since its first inception in 1960s. Okay, so this has created growing concern and interest among Muslims and also non-Muslim, because it's a viable, robust, and competitive Islamic financial system. So it can also be argued it could be the best alternative to the existing conventional system. So from the early reading, there were about, this was in 2010, 12 like that. So there were estimate about 550 Islamic financial institutions, okay.
I think there is the issue for the signal. So please confirm first, sister. Please confirm to her. Can you contact her? Or
Yes,
go
sir.
out
Yes,
already?
sir. We already contact Dr. Nurizalia.
Oh.
Yeah, sorry, I think I got disconnected.
Okay, it's okay. It's okay, doctor.
Okay, sorry. So I have to share again my screen. Okay. Okay, so the first conception would be, if it is based on religious activities, it is not profitable and should not be making profit. On the contrary, when we look at hadith, the Muslim society actually do not prohibit profit when making economic activities. During the Prophet and Caliph time, there were traders and they were really good at trading and earning profit. So the second misconception would be Muslim investors could not invest in company owned by non-Muslims and vice versa. So this is wrong. This conception, the actual truth would be Muslim can invest, but in selected industries. So companies that related to pork, alcohol, and gambling, these are prohibited activities. So like in Malaysia, we have Syariah compliant companies, like over 800 companies determined by the Securities Commission. So we can actually buy shares from these Syariah compliant companies. They don't involve in these prohibited activities. The debts that they take to a certain extent comprise of Sharia compliance financing. Okay, so the third would be Islamic bonds, or better known as sukuk, is a rather risky investment. Okay, for the truth would be the Sharia compliant is a debt. So debt structure, sukuk is the Islamic bond. Okay. There is no embedded derivative like collateralized debt structure. Okay, so the debt is more transparent and the sukuk is based on assets. Okay, based on asset, so we know who owns what. It is not based on collateralized debt. Okay, the last would be the Sharia compliant banks are only regulated by Sharia law, and this is also incorrect. Islamic banks are also regulated by the local authorities. Like in Malaysia, we have the Central Bank of Malaysia, and then they also are regulated by the Companies Act. They have Islamic Financial Services Act, and they also need to comply if they are involved in the capital market, and they need to comply with all the regulations issued by the Securities Commission of Malaysia. Okay, so looking at the misconception and the truth, we need to know because Islamic financial systems or financial institutions are actually derived from, you can say the origin comes from the Islamic worldview on Islamic economics. Okay, so we need to understand what is the worldview for us as Muslim based on muamalat. So for Islamic economics, the objective would be ensuring or fostering human well-being. Okay, human well-being through allocation, distribution of resources. Okay, and how we allocate and distribute resources, it should be aligned with Islamic teaching. Okay, so the basic objective for Islamic economy is to provide basic human needs, okay, fair and equitable distribution of resources, and we cannot exploit individuals. So the main objective would be to uphold social justice, to ensure bonds of brotherhood, to improve moral and material development, so to achieve falah. And when we say about falah, it's not just success in this world, but also in the hereafter, as mentioned in Surah Qasas, verse 77. Okay, so achieving falah relates to well-being of mankind in this world and in the hereafter. So to have a betterment of the ummah through equitable distribution. Okay, how we distribute, how we allocate, if from the conventional economics would be scarce resources, but when we look at from the Sharia, actually Allah have provided abundance of resources. It depends on how we define scarcity of resources. Okay, so we want it to have equitable distribution for material and also attain social justice. So if we look at it, wealth, when we look at how the Islamic economy wants us to do business, okay, be involved with business transaction, it has to be equitable. It has to be justice. Wealth should not be circulated. Okay, wealth should be circulated. I mean, wealth should not be hoarded by a certain people and not being circulated to other ummah. Okay, so in Surah Hashar, verse 7, it is talking about giving sedekah to orphans and the needy, the wayfarer. So wealth should not become a commodity between the rich. Okay, so to achieve that, it has to be allocated equitably. Okay, and another strong objective would be for Islamic economy to establish socio-economic justice through the system of zakat and sadaqah. So where it provides mechanism of brotherhood and unity amongst the ummah. So we can achieve that by transferring the wealth from the wealthy by having sadaqah and zakat to the needy. So for the zakat, we have the 8 asnaf. Sadaqah, so it's more widespread. So zakat actually discourage hoarding of wealth. Okay, so it is paid on idle funds in excess of one's needs. So in Malaysia, we do not have a dedicated zakat accounting standard, but a guideline issued by our Jabatan Agama Kemajuan Islam Malaysia, there is zakat for personal, zakat for business, zakat on agriculture, on gold, but there is no specific accounting standard. It's just a technical release. So it is up to, it's like a general guideline, okay? A general guideline, and there is no specific standard similar to the IFE issued by Bahrain, okay? So having wealth being circulated, so it would encourage spending, it encourage people to invest. So this in the end would create a multiplier effect on the growth of national income. So here we can see zakat are collected from the rich to the poor. So this would actually strengthen the purchasing power of the poor. In the end, the poor can actually buy goods and services, so it would increase demand for good, and in the end stimulate economy and also lead to increase in employment opportunities. So a true Islamic economic system would involve no exploitation of individuals. It would abolish riba, avoid gharar, and also refrain participants of the markets from maisir. Okay, so the Islamic economics, based on that theory of Islamic economic, it derives the Islamic financial systems. Okay, so abolish riba, so that under Islamic financial system, it actually prohibits payment or receipt of interest. So interest is equivalent to riba, which is in excess. Okay, in excess. So I will have another slide explaining on that. Because in the verse of Baqarah 278 until 279, it actually warned believers not to be involved in usury. Okay, so if they're involved in financing, giving a loan, it should be loan without the interest. Meaning, if I give a financing to my friend A, 100,000, A have to repay back to me 100,000. So riba is like when A pays me 1,120,000. So the excess of 20,000 above and beyond the principal, that is riba, which causes losing situation for A and a gaining situation for me. Okay, and the prohibition of payment or receipt of interest, it is to uphold social justice. We want equality and property rights. Islam discourages interest, but it encourages earnings of profit. So that's why profits is actually symbolizes through the successful entrepreneurship performed by Muslims or market players. And when we perform in entrepreneurship, meaning doing business, okay, or trading, it creates additional wealth. So in the end, in the Islamic economy, it encourages us to do business. Okay, encourages to do business, earning our hard-earned effort, not just like giving interest, earning money on money. So that there is no risk and reward involved, and no hard-earned effort put in, where we just give out a loan and then ask the other person to pay us more than what is being loaned out. Okay, so interest itself is just a cost that is accrued regardless of the outcome of business operation, and it does not create wealth if there are business losses. So to achieve social justice, borrowers and lenders in financing arrangement, they actually share rewards and losses in an equitable manner. So in Islamic financing, we have various contracts to actually overcome charging of interest through profit or loss under musyarakah, or profit sharing only under mudarabah. We have ijara, which is leasing. We have salam for future buying, sort of usually used for agricultural financing. Okay, so they share the rewards and risks. So they share the rewards and also the whatever loss that they face, depending on the types of contract that they use. Okay, in an equitable manner, it is based on the effort that each of the partners put in. Okay, so the process of wealth accumulation and distribution in economy is more fair and represent true productivity. So the keyword is looking at true productivity, putting in effort in entrepreneurship activities to generate profit. And from these earnings of profits, it creates the increase in national income. We have more community members being richer and are able to provide more sadaqah and pay zakat. So it ensures that the whole economy itself sustained. Okay, so it encourages profit making, but not charging of interest and all the other two. Okay, riba is not allowed, gharar, and also maisir. Okay, so in Islamic financial systems, the suppliers of fund, they are not creditors, but they become investors if they, so we can see in Islamic banks, they offer contracts, investment accounts, instead of being just creditors. Okay, so the provider of financial capital, they can also be an entrepreneur. So they share the business risk in return for shares of profits. So again, to emphasize in the Islamic financial system, they emphasize risk sharing, okay, and emphasize also importance of Sharia contracts. So I had seen the course outline. I think the student had gone through the various accounting for Sharia contracts. So the basic premise is to match reward to risk. So again, to reiterate, it promote entrepreneurship through business activity, through productive economic activity. Okay, and the financial system, Islamic financial system, do not allow hoarding, okay, of wealth, and it also prohibits transactions that involve uncertainty, okay, gharar, gambling, which is maisir, and unnecessary risk. Okay, so the system strongly uphold contractual obligations, and we need to be transparent and disclose information as a form of ibadah. Okay, and all our business activity should not be involved in investment in business dealing. Okay, investment in business that deals with alcohol, gambling, casino, pork, and the rest. Okay, so under the Sharia parameters, as the previous slide emphasized on upholding contracts obligation, the contract should be having mutual consent. Okay. In the contract itself should not contain, excuse me, prohibited elements, okay? And it has to be a lawful objective purpose, fulfill the objectives of Sharia. If to be on a wider aspect, upholding the maqasid of Sharia of the 5 aspects in terms of wealth, progeny, and the rest. So the prohibited elements in detail, I explain here. These are more related to the Islamic banking and takaful, and you have derivatives here. So riba is the excess, increase, expansion, or growth. Okay, so it is the premium that one must pay if paid by the borrower to the lender over and above the principal amount borrowed. So this is considered as interest or usury in the ayah Surah Baqarah mentioned just now. Gharar relates to ambiguity or uncertainty. So it is prohibited because it may lead to fraud or the contract being non-executable. For example, contingent contracts. Okay, so contingent contract, it means the contract can be executed dependent on the occurrence or non-occurrence. So that is the uncertainty. Okay, does it occur or not occur? So that uncertainty constitutes gharar. Okay, so when the substance of contract is non-existent, not specified properly, or is it too broad or too specific, it gives rise to ambiguity or uncertainty. Maisir is related to gambling on any form of business activity where monetary gains are derived from mere chance, speculation, okay, and conjecture instead of productive activity. So this relates to options, futures. So that's why instead of insurance, we have takaful or Islamic insurance. Okay. So I would like to bring us all to the historical overview of Islamic finance. So I just found this interesting article from Abdul Azim Islami in the journal Intellectual Discourse. So it gives a historical overview of Islamic banking, Islamic finance from the times before Islam came about, before the Prophet, before his age comes to 40. So there were practices by the companions. So we can see from history of accounting itself, the Arabic Peninsula was actively involved in trading even before when Islam came during the Mesopotamia. So we can see activities of accounting at that time. So the practice of Islamic finance become documented, and they found proof from the Islamic economists, researchers, So they came up with journal articles and give an outline. So it's a very, I think, useful way for us to learn more about how Islamic finance came about from the history itself, from the practice of the Prophet Muhammad sallallahu alaihi wasallam and his companion. Okay, so the city of Mecca itself had been an international trading center even since before the Islamic period. Okay, so having trade as the main occupation for the Makkah people, they needed financing for business purposes. So those that have surplus funds, they would advance capital to businessmen and traders, and then they would share the profit. So the Prophet ﷺ himself actually engaged in trading before his prophethood and traveled several times, okay, with the financial capital provided by Khadijah radiallahu anhu, okay, who extended finance to the Prophet ﷺ on mudarabah basis. Okay, so other than mudarabah, there are also other forms of contract performed in during the Prophet time, murabaha, musyarakah, salam. They also have sukuk as well, but then it was stopped due to issue of uncertainty. Okay, and we can see some rich companions of the Prophet, such as Abbas, Abdul Muttalib, Khalid al-Walid, Uthman Affan. Okay, they had lending businesses during the pre-Islamic period, okay, with the people of Makkah and Taif. But after embracing Islam, they abandoned it because in the Islamic system, lending and borrowing must be without interest. So previously, they lend but with an interest. Okay, so the borrower would pay more than what was borrowed. And we can see in the longest verse of the Quran is about documentation of lending and borrowing transactions, verses 282 Surah Baqarah. So it offers, this ayah especially offers a guideline towards taking a pledge. So whenever a borrower borrows, that borrower should have a pledge, a lien or a security as a surety for repayment of the debt. Okay. And if we look at the zakat receiver, the 8 asnaf, one of the asnaf would be gharimin, people who are in debt. So with this verse, because during that time, from the article that I read, they encourage, they have they have practices of lending, but it has to be without interest. And whenever the debtor, okay, or the borrower are not able to pay, that would become the gharimin. Okay, and they would receive this issue of gharimin is resolved by the allocation of zakat to the gharimin at that time. So it was discussed in this article. So during the early period of Islam itself, the Baitul Mal, the House of Finance or public treasury for the government at that time, it was also the first institution, okay, to mark the foundation of formal arrangement of financing. Okay, so it is a government agency of finance, but it also extends loans or investment capital to individuals. Okay, so it functions as a state bank for the Khalifah and also for the public. So for example, this is the example of extension of financing by the Caliph. Umar extended an amount of 4,000 dirhams to him for business purposes. Uthman bin Affan also provide capital to carry out business on the basis of qirat, so they would share the profit. And then Zubair also showed the way on how to perform banking at that time. Okay, he would accept deposit like current accounts and utilize that money in business. So it is reported that when somebody wanted to deposit money with Zubair, he would say, make it a loan to me. And then he would use that for business and then return back. So this is safekeeping what account safekeeping. So if we put money as a safekeeping, that person would return the same exact amount to us back. Okay, for safekeeping. Okay, so during the historical time, so the Islamic economists, they actually proposed 16 contracts, because we can see that during that time there were a lot of giving and taking loans, okay, giving and taking loans without interest. So Islamic economics proposed 16 contracts to replace the classical loan contract. So these contracts are based on partnership in profit and product. Some are based on investment agency, and the rates are based on sale and lease arrangements from Al-Jarhi 2016. So we can see early writers like Siddiqui, they focus on mudarabah or partnership because they considered it as more just, just and rewarding and more suitable for Islamic banks than other modes of financing. Okay, so in later period, Muslims invented various methods to sustain financing, investment and transfer of money such as suftajah, cash waqaf, by al-wafa, by al-raja, etc. So Abu al-Su'ud during the Turkish or Ottoman Empire reports that, so I'm talking about cash waqaf here. So cash waqaf at that time, they practiced the surplus unit would be able to lend money to the poor. So they give cash without interest and extend the money as capital also to working partners on mudarabah basis. And when there is a gain on that business activity, when they extend as capital, that profit, they would spend that profit or spend that gain on charity. So during that time, that is how they practice cash wakaf. Okay, that is just some small snippets of historical overview of Islamic finance. Before we go into the modern Islamic finance, so I had referred to a few resources. So the growth of modern Islamic banking can actually be attributed to 3 factors. If we look, it is all related to increase in economic activity. Okay, so the rise of oil prices after 1974, the Arab and Muslim countries, they actually experienced a rise in national income, a rise in economic activity, and greater investment that is Sharia compliant. So, and at that point in time, also they have devout Muslims dissatisfied with the existing Western commercial banks that involved in interest earning activities. And also we can see a rise in rediscovering Islamic values, especially for countries that had gained freedom from colonialization. Okay, so they had faced rapid industrialization, urbanization, so they need capital to expand further. So they're looking more towards Islamic finance alternatives in comparison to Western financing. So the modern experience of, if you're looking at Islamic banking, there would be 2 categories. Okay, so if we look at research papers, if you search for Islamic finance, Islamic banks would appear first. Okay, so because we can see in historical time, that is one of the first financial, you can call it Islamic financial institutions that came about because people needed funds to be involved in economic activity, to do projects, to do business projects, earn profit, and the chain would continue. When we have profit, we spend, we pay zakat, sadaqah, and so whatnot. So it is like a whole cycle. We need to spend to actually improve the economy. And spending here is based on developmental projects. Okay, developmental projects. So modern Islamic banking, we have 2 types of categories. Islamic bank that coexist with interest banks, or we have Islamic banks operating under a binding and all-embracing Islamic banking systems. Okay, so examples. What does it mean by Islamic bank that coexist? So it means that they exist together with interest-based bank. Okay, so for example here, Al-Hilal Islamic Bank Kazakhstan. Okay, sorry for the spelling error. There may be a single Islamic bank, okay, or many other national Islamic bank, or more than one Islamic bank in the country, okay, such as in Egypt, Qatar, Bahrain, Bangladesh. So they have, they exist together. Okay, they coexist together within the framework of have interest-based and also Islamic. It can be only one bank or more than one bank. Okay, the practice of conventional bank, they provide some forms of Islamic financing and investment to their clients. So conventional banks, they also offer Islamic financing, but in the form of Islamic windows. This is being practiced in Malaysia, Qatar, Egypt, and Saudi Arabia. Okay, so we have an Islamic bank doing their own business, and then we have conventional bank providing interest-based business, and we also have conventional banks offering Islamic financing and investment to clients, which is called Islamic windows. Okay, Islamic banks that operate under all-embracing, it means the whole banks in the country. The entire banking system is based on Sharia that appears in Sudan and Iran. Okay, in this side of the world, we have coexistence. Okay, we have coexistence of Islamic bank. They coexist together with conventional bank that offers interest-based activities. So we can see from the journey of modern Islamic finance, like I said, we're looking at Islamic bank first. In 1960s, okay, the emergence of Mid Qamar local savings bank in Egypt, it's a private initiative. So it did not last for some time because of the worry about religion controlling over the business activity. Then in 1970s, the government of Egypt, they put up Nasir Social Bank. So this is a government initiative. Then it was accepted, being allowed to operate. So it was being replaced. The Mid Qamar, it only existed for a few years and then discontinued because this initially was a private initiative, and then the government took over with the name of Nasir Social Bank. So a banking system that operates without interest. Okay. In Malaysia, we have Lembaga Tabung Haji. It was mainly for the purpose to help the pilgrimage save up to perform their Hajj. Okay, so now it has expanded into not just taking deposit, but also doing investment and earning profits to the betterment of the depositors or pilgrimage. Okay, pilgrims. So we can see in 1970s, we have an international effort with the creation of Islamic Development Bank in Jeddah. Okay, so this Islamic Development Bank or IDB, the focus would be on the giving financing, giving capital to help countries that have shortage of capital. As the name says, development. So the capital would be used for development projects for the betterment of the countries that have shortage of capital. Okay, and 1970s, 1980s, they have more emergence of investment bank, international holding bank, so commercial bank, investment bank. Okay, and then in Malaysia, we have the Bank Islam Malaysia. It's a full-fledged, and we also have you can see in 1989 ANZ Global Islamic Finance in UK. So all these are some investment bank, okay, and some international holding banks. And in 1990s came about accounting and auditing organization for Islamic financial institutions in Bahrain. So this the short name would be IOFI. They came out with accounting standards, auditing standard, and governance standards, Sharia governance standards. For IFI, this covers Islamic banks, takaful. They also have specific standard for zakat. So what is unique about IFI? I think Malaysia also referred to IFI by Islamic banks, bank by what I mean is Bank Islam Malaysia. Okay. During that time, there is no other accounting standards that actually reflect the true activities of the financing of banks using contracts. So we can see IOFI, they issue accounting standard based on contracts. Accounting for musyarakah, for mudarabah, for murabaha, they don't have tawaru. I think in the process, last year when we did our class, I think they are still developing accounting for tawaru. Previously, there is no standard on that. I think they are looking into it. They have accounting for ijarah. You have all the contracts, salam, accounting for zakat, accounting for sukuk. They have various. So, it could be accounting for sukuk issuer, or you accounting for investment in sukuk. So it's very detailed. And they also have auditing standards, so internal audit and external Sharia audit, and they are quite advanced on that aspect. Okay, we also refer to them for best practices. Okay, so in the contemporary era, you see the existence of Islamic Financial Services Board. The IFSB also issues Islamic Financial Stability Report, so we can have a read in terms of what are the latest news with regard to Islamic financial institutions, the funding, who is leading in the market, and what are the initiatives, how they evolve, not just looking at banking. Now we have various types of Islamic financial institutions with various objectives. Okay. And not just looking at financing, we have investment, we have sukuk. We also have now with the term coin financial inclusion, and we have digital banking, digital wallet. Those are under Islamic fintech. Okay, and what else? More towards activities with focus on ESG, environmental sustainability goals. Okay, I think the banks are moving toward that. I was looking at Malaysian, so at the international level as well. Okay, the focus, the current developments that we're looking at, if they're giving out financing, like sukuk, issuing sukuk by corporations, sukuk that related to green initiatives, like for the financing of projects related to renewable energy, green technology, zero carbon, and so whatnot. Okay, and also financial inclusion. So under Maqasid, we want everyone to have access to capital. So they have financing like microfinance. So they have now encouraging microfinancing institutions like cooperatives. Cooperative have been around and utilizing Sharia contracts based on mudarabah or wakalah. It depends on what contracts that they are using. Okay. Cooperatives, they are more widespread and also include the lower level income to actually help them to have access to financing and be involved in economic activities. Okay. So in Malaysia, specifically, so we started off with the Lembaga Tabung Haji or Pilgrimage Fund Board. So we have a full-fledged Islamic banks. We have local. So these are local Bank Islam Malaysia and Bank Muamalat Malaysia. We also have foreign Islamic bank like Kuwait, Al-Rajhi. Okay. And we also have Islamic banking scheme, which is conventional bank with Islamic windows. And later on, this, for example, we have Maybank. Previously, they have Maybank and then they have a window. Now they have Maybank Islamic, CIMB Islamic. So all the foreign or local conventional bank, they started with a window and then they came out as an Islamic subsidiary. When they form Islamic subsidiary, they will have their own Sharia committee. Okay, so in any Islamic financial institution, it is very important to have Sharia governance practices. It could be a Sharia committee, it could be a Sharia advisor to actually oversee whether the whole activities are Sharia compliant from pre-inception of products, execution, and post. Okay, from accounting practices in terms of risk management up until audit, internal Sharia audit and also external Sharia audit. And during 1983 up to 1993, we also have Islamic money scheme banks. Okay, so many market instruments were developed. So we have in the so in Malaysia, the major one would be Islamic banking takaful, that would be under the Central Bank of Malaysia, and then we have the Islamic capital market. So within the Islamic capital market, we have money market and capital market. Okay, capital market for the long-term debt and equity, money market for short-term money market instruments. Okay, we have treasury bills for short-term investment, so for the purpose of liquidity of financial institutions and also companies. Okay. And for takaful operators, these are one of the long-standing takaful operators, Syarikat Takaful Malaysia. So they have expanded. Last time was 7, now it can go up to 11. Okay, so that is the landscape of looking at the major or large Islamic financial institutions operating in Malaysia. Okay, so worldwide, this is worldwide. This is taken from, the source is ICD Refinitiv Islamic Finance Development Report 2022. We would see that now at the end of 2021, it's about near to 4 trillion value of Islamic finance asset. Okay, and it is projected to go up to 6 trillion in year 2026 by the Refinitiv company. Okay, it's a company that handles a lot of data worldwide in terms of the assets, the funding, which Islamic finance asset, what country is leading. It's a good report to look at if you're doing research and doing some write-up, and also for general knowledge. And you could see what is the way forward. There are also other reports, excuse me, from S&P Global. You can also refer to Islamic Financial Services Board report. Is Islamic Financial Services, Islamic Financial Stability. So there's also report from IDB, I think. So it's good for accounting students involved in Islamic, if you're learning Islamic financial services and doing an accounting point of view, because from what in my opinion, accounting actually evolved. It's a dynamic profession, because it depends on whatever Islamic financial activity that the economy is bringing up. So okay, so it's very dynamic. It changes whatever economic activities. What are the Islamic financial activities involved? How do we account for that from the point of view of accountants? Okay, or if you are auditing, you will need to understand the Islamic financial instruments, the Islamic financial institution activities in order to do an internal Sharia audit or external Sharia audit. So for the accountants, Islamic accountants, you will need to understand all the financial instruments being practiced by the various Islamic financial institutions. So from this report, these are the major sector or asset class. So you would need to understand what are the practices of Islamic banking, what contract they use, what contract are used for takaful. So this is the number of institutions. Instruments are related to sukuk and Islamic funds. Okay, so what is interesting here, they classify OIFI. This is other Islamic financial institutions. Okay, other Islamic financial institution comprise of what? Okay, so it comprise of financing institution, Sharia compliant financing institution. It is neither bank or takaful. There are investment firms, financing companies, fintech, leasing, microfinance firm, brokers, traders. Okay, so the main types of activities that OIFI involve would be on investment in funds, real estate, mortgages, microfinance. And they provide an example of Sharia compliant micro and small enterprise in Singapore. Okay, they did collaboration with Visa. Visa and Singapore-based Hula, they provide Sharia compliant buy now, pay later solutions. Okay, so there's this new trend of Sharia compliant buy now, pay later solution. So we have also practices in Saudi Arabia, so in Malaysia, split pay. Okay, those are some example of the current expansion. When we say Islamic financial institutions, it is not just restricted to banking and takaful, but also other Sharia compliant financing, investment that is available in the market. Sukuk here we have like over 4,000 instruments. Islamic fund here refers to equity fund, okay, meaning investment in Sharia compliant funds, exchange traded funds. So we have in the capital market, in the Islamic capital market, we have indices, FTSE indices, those are Islamic indices. And also Islamic fund comprise of investment in money market, so short term and also long term investment. Okay, so we can see top countries by Islamic finance asset. When we look at the types of banking that they have, Iran and Sudan is 100% Islamic or Sharia compliant, I mean the banking system. So logically that would be looking at the first ranking of top countries by Islamic finance asset, 1.2 trillion. Okay. And then this is the same graph, a chart. Okay, this is based on Islamic finance asset. Previously, this is on number of institutions or instrument. Okay, it's the same classification. So, looking here, looking at this is the structure of banking system. It can be a full-fledged or dual banking system. So we had seen earlier, Iran and Sudan, it's they call it Islamic banking system only one banking system which is Sharia compliant. Okay, Malaysia, Bahrain and Pakistan, we have dual. So we have Islamic banking system. We operate in parallel, meaning parallel together with the conventional system. I will show an example afterwards and try to relate to accounting implications because this is IPAC program. So I start in general and then give an example from the Malaysian perspective. And we also have a conventional plus. The system is basically a conventional system, but only have a few Islamic banking institution operating on the fringe of banking system. While we're looking on the banking system, that is the largest contributor of Islamic finance asset in the world. Okay. So the practice of Islamic banking, they can have three types. So this is the governance structure. A full-fledged, okay, meaning fully the whole business activity are Sharia compliant. In Malaysia, there is not much, about 3 or 4, 5 institutions, local and also include international foreign Islamic bank. Previously in Malaysia, we started off with Islamic banking windows. Okay, so we have conventional bank like Maybank, CIMB, HSBC, Standard Chartered, Citibank. They have a window, okay, of within that conventional bank, they have a department that provides Islamic financing, receiving and also providing financing. And then we move to Islamic banking subsidiaries. Okay, when we have subsidiaries, they have their own board, so they have their own Sharia board. So it's totally separate. Okay, but still for certain function, they have shared services, especially some banks, they have like group internal audit, they share with the parent company. Okay, the regulatory concern for banking with windows, Islamic windows or Islamic banking subsidiaries, they have to be very particular not to mix Sharia compliant and non-compliant funds. Okay, they cannot mix Sharia compliant and non-Sharia compliant funds together. So they have to have a firewall requirement, including separate capital in place for the two types of banking services. Okay. So looking further into financial intermediaries. Okay, intermediaries. What are intermediaries? Or all this while we are looking at financial intermediaries. Okay, we are looking, when we look at the history of Islamic finance, we have surplus fund. People who have more fund, they will give financing or invest. Okay, either give loan to someone who has deficit, who lacks capital. Okay, so this surplus fund unit, they will give financing to the financing or access to capital. Okay, to deficit fund units. Okay, and then this deficit fund unit, they can do a business. So it is based on contracts. So they provide risk sharing, liquidity initiatives, and also information. So Islamic financial intermediation or intermediaries, so they mobilize resource. So from Islamic economic point of view, from first we had learned earlier, Islamic economic is about resource allocation. And it has to be in compliance with Sharia. And how do we allocate resource? One of it is through Islamic financial intermediaries. Okay, from these intermediaries, we have institutions. So here come about from another perspective on what is Islamic financial institution. They are intermediaries. They allocate resource. They mobilize resource in a Sharia compliant manner. So these are some categorization that came about from ISRA textbook. Depository institutions, it can be commercial bank, savings and loan association. We have mutual savings bank, credit unions. We have cooperative banks. So in Malaysia, one of the types of Islamic bank is cooperative, like Bank Rakyat. So they start off being a cooperative bank. It become large. So they have Co-op Bank. Now there are two major banks, okay, based on Cooperative Act. So the source of fund that they acquire is through deposit from the depositors, okay. You also have non-depository institutions, which are contractual savings institution, can be takaful and pension fund, okay. For pension fund, this is for the employer and employee contributions. Like for takaful, we pay premiums. We call it takaful participant. Yeah, we pay premiums on yearly or monthly basis. So this source of fund, the banks would mobilize that for giving out, like for banks, they would give out as financing of projects, okay? Financing for firms, it could also mostly on financing commercial activities, runcit. Yeah, retail banking, have retail banking, or it depends whether, so we have commercial bank usually involved for retail banking, investment bank, they will be involved in investment activities. Okay, so it depends on what are the major focus of the intermediaries. Okay, so we have investment intermediaries, finance companies, mutual fund, investment bank. So investment bank would have their source of fund from other financial institutions. So other banks, a commercial bank, all this, they can invest in investment banks, and this investment bank use this source of fund to do investment projects. Okay, mutual fund, their source of fund would be shares. Okay, so they have trust fund. So there are so many product innovation nowadays that caters to various types of customers depending on the customer's need, whether it is the lower level, middle, or those that have abundant of fund and they want to invest long term in shares, or they want to invest in bonds, Islamic bonds, or they want to invest in real property. So we have that in Islamic capital market. Okay, real estate investment trust, REITs. Okay, so going further, some of the issues and challenges, okay, despite their growth in Islamic finance, you can see Islamic finance asset have grown up to like 4 trillion of USD value. Okay, there are challenges faced by the Islamic finance sector where there is disparity, which means differences between theory and practice. Theoretical discussion actually emphasize on the superiority of equity-based and risk-sharing modes of finance, which focus on profit and loss sharing. However, in current practice, this actually differ from this ideal. Okay, the ideal by the theoretical or academics, or the based on theoretical underpinning, Islam actually encourages risk and reward. So that would actually come from equity-based and risk-sharing activities. But in real life, taking from Malaysian perspective, most of the financing majority are based on murabahah or commodity murabahah tawaruk. Okay, so it's a fixed profit based on cost plus profit contract. Okay, so that is less risky when banks, in comparison to when banks are involved in mudarabah financing, musyarakah financing, because there's an element of profit and loss sharing. Okay, so in Malaysian case, majority of the financing that banks give are based on commodity murabahah and tawaruk. Okay, so they can see a dominance of debt base by Iqbal and Mirajo in 2007. The banking system are dominated by debt base, okay, rather than risk sharing finance in the modern history. And there is also the challenges to actually realize maqasid syariah at the level of general framework and also at the level of product development and how it is implemented within the industry. Okay, so banks are seen as just profit maximization institutions. Okay, we also have other Islamic institution like Baitul Mal, under in Malaysia is under the state. So we don't have a national zakat. So each state have their own, because this is due to regulations. So this Islamic institution, they do have they follow because it is not profit oriented. So it's just funding, accounting for funds. Okay, so those are related to charity, because when we look at the first slide, is it Islamic finance just involved with mosque and charity aspect? Is it philanthropies only? Is it not profit making? So but actually it's more than that. So then there were issue of Islamic bank should involve in CSR, a lot of CSR activity just to cater for maqasid syariah. But then banks, they also need to make sure they have to be profitable because they also have shareholders. Okay, so it's like a dilemma. And then came about ESG initiative. So we can see a lot of banks being involved, or even the Islamic capital market, we have sukuk, a lot of sukuk with green initiative, or bank giving out financing, or they call it ethical financing. Okay, that's all the branches that try to achieve maqasid syariah being put forth by banks, by the Islamic capital market players. Okay, and I think during the COVID-19 pandemic, for the past 3 years, bank also provide initiative to provide a cushion for the needy. Okay, they also provide like they call it the term financial inclusion. Financing or financial facilities should be accessible to everyone. So they came about microfinance. Okay, microfinance, not just to cater for those with high credit ratings, but also what about the needy? Okay, they need capital to do business activities in order for them to survive. Okay, business activity. So if we keep on giving sedekah to them, or just give aid, like for zakat, I think in Malaysia, apart from giving zakat in terms of monetary amount, they also give like trainings, give capital for the zakat recipient with the aim to change them from zakat recipient to zakat payers. Okay, so like lembaga zakat in Kedah up north, they give out they give capital to the zakat recipients for them to do to become paddy fielders, okay, and earn money and earn profit. So they change from zakat recipient to zakat payers. Okay, and then the third issue would be standardization of syariah ruling. So this has always been an issue because of the different mazhab. Some areas like Malaysia is always issuing out sukuk, and we are more on the murabahah tawaruk side, but not agreeable by the Bahrain scholars. Okay, those are the things that takes time to standardize. Okay, not just Sharia rulings, but also accounting standards, I think, with relation to Islamic finance. And also the issue of, is there adequate supply of talent pool of experts? Okay, high caliber professionals. So is there enough Sharia committee members so that they won't be having, like in Malaysia, there are rules. If you are Sharia committee of Islamic bank, you can also be Sharia committee of Takaful, because they are different industry. Okay. Is there enough Sharia advisor to advise Islamic capital market activities? Sharia officers working in all those Islamic, you can see there are so many Islamic financial institutions relation to Islamic funds, Takaful, we have other Islamic financial institutions, microfinance, cooperatives, anything that related to Sharia compliant activities. I think it's a must to have a good Sharia governance structure, meaning you should have a Sharia committee, you should have Sharia officer, you should be reviewers, you should have internal Sharia audit and also external Sharia audit. So those are the challenges that the Islamic finance are currently facing. I think, do I still have time or is it close to end? Okay.
Yes, Dr. Nurazala, you have a lot of time.
A lot of time.
Yeah.
How long? Half an hour, is it? Okay.
Okay. Thank you, Dr. Nurazala, for the
thank
very
you.
attractive material.
Thank you.
So everyone, the next agenda is the question and answer session. Before that, we would like to greet our lecturer, Mr. Bahrul Ilmi. Good morning, Mr. Bahrul.
I should unshare my screen, right? Okay. Is it okay if I don't continue with the accounting implication, or you would like, if there are additional time, I can continue with how Malaysia do accounting for the IFIs. If we don't have enough time, I just stop at the basic overview of Islamic financial institution.
Okay, let's see. So can we continue to the question and answer session?
Yes.
Okay. So guys, if you have any question, please raise your hand. Before everyone is preparing their question, I would like to greet Mr. Bahrul Ilmi. Good morning, Mr.
Yes, good morning. Good morning,
Dr.
everyone.
Bahrul.
Good morning, Dr. Nurazalia. Nurazalia Zakaria.
Boleh panggil Azalia.
Okay,
It's
Azalia.
long.
Okay. Thank you for sharing, Doctor, for everything that about accounting and Islamic banking and development in general. So it's very interesting, actually.
Okay, thank you. Because I actually I had difficulties on what that to present, because it should be just on the surface, or
Okay, so because we can also we can compare that the situation about the development of Islamic banking between Malaysia and Indonesia, because if you look at from the share market, I think Malaysia is still a top one. We look at from the development of Islamic banking itself, because Indonesia is still a lot of the issue, especially the awareness of the people, Indonesian people, to save their money in Islamic bank, and also still challenging. But the Malaysia, I think, it's not high the population, but the awareness of Islamic bank and the awareness people to save their money in Islamic bank, and also how to use the Islamic financial institution is more better than Indonesia. So we know this.
But we also learn from Indonesian. I think Indonesia have a separate accounting standard, right?
Yeah, we have.
Yes, Indonesia, Pakistan, those are strong. We say strong nation that stands true to their own accounting standards.
If you look at from the Islamic financial, what do you call it? I think the ranking, IFC, financial country index. Still Malaysia, Indonesia, still Malaysia, Indonesia,
Yes,
Malaysia, where?
we are around because under Southeast Asia. I think in the definitive statistic, I saw Indonesia coming out first for education provider of
Yeah.
Islamic finance.
Okay.
That's really good.
We started in 1991 with Bank Muamalat Indonesia. I think Malaysia is in 2000 what? No, 19 yeah.
1960s, but that was not a banking, it's like for the pilgrimage.
Oh,
Tabung haji.
Haji.
Tabung haji for people to go for Hajj. So it's not like purposely for banking. So the banking came by Bank Islam around the same year, I think 1980s.
Yeah.
Bank Islam Malaysia.
Bank Islam. When I was in Malaysia, also using the Bank Islam also for the bank account.
If you are studying in UIA, I think most of the
most of us study using Bank Islam, Bank Islam. Bank Muamalat, I think just for pay, but Bank Islam using for the like maybe debit or something like that.
Yes. But now they have competitors, so they have to compete really well.
Okay, I think there is question from the. Okay, there is question from the student. Okay, sister,
yes.
Can you lead the students?
Right, sir. Excuse me, Dr. Razalia, you want to directly answer the question or you want to collect them first?
I can directly answer. It's okay.
All right. Maybe Nasrina Charabinasti, you can ask your question.
Okay, thank you. And this is my question is related to the challenges of Islamic finance. How do Islamic bank manage the risk they face? Manage the risk. Manage the risk they face.
Risk what?
I couldn't get risk.
Risk what, sister?
Risk. I couldn't get I couldn't hear risk. Is it?
Yes, me too.
Risk?
Me too.
Okay.
Nasrina Charapinasti, maybe you can
risk for the risk that they face.
Risk. Risk faced by Islamic finance.
Yes.
Yes. What sort of risk may I ask? There are so many types of risk. Credit risk, non-compliant risk. What do you have in mind? When you're asking how do they manage the risk in terms of what aspect? I'm asking you back. Sorry.
What I think about the risk management. I think risk management.
Risk management.
Yeah, I say risk management because at some time the potential of Islamic bank the face of the risk as maybe as
bank run.
Yeah, I think
inadequate capital.
Sister Nasrina, you asking about the bank? Yeah, Islamic bank. Islamic bank?
Islamic bank.
Yeah, Islamic bank.
Okay, Islamic bank. When they face maybe how to mitigate the issue when they are using the Islamic finance in the Islamic bank. So is it like they are fully compliant or maybe like just maybe or there is another regulation that
okay, like I just give from the point of view on Malaysia. So like I said, remember the more risky contract would be mudarabah and musyarakah. So we can see in Malaysian practice we have a lot on murabahah. So it's an arranged tawaruk. So that is how they mitigate the risk of financing in terms of bank is an intermediary. So they would receive deposits. Okay. So your deposit would be deposit, not investment. Because in Malaysia we have investment account. They would specifically say it would be on mudarabah or wakalah. In that sense itself, not many banks are taking on mudarabah. So you can see if you use mudarabah, the risk is higher. So for financing, so they receive on wadi'ah or shareholders fund, and then they would decide. So majority, about 70% or 60% of financing in Malaysia is on organized tawaruk. So we have a bursa suksila. So this bank, let's say, but there is a risk of syariah non-compliant. When we want to reduce the risk of not having enough return to give back to the depositors, there is also the risk of syariah non-compliant risk. Because they have so many transactions for tawaruk, you have to take into consideration the timing, the sequence. So if the bank gives out a financing, but the actual tawaruk has not taken place, whatever profit earned from that financing has to be disposed as syariah non-compliant. So that is one risk. They try to cater for one risk of profit return, so whatnot. But then you have another risk that you have to take care of, syariah non-compliant risk. In Malaysia, we have the Syariah Committee report. Banks, one of the best bank is Bank Islam. They would disclose number of transactions not complying, and most of it come from the tawaruk. Okay, and then they have to dispose.
So what the kind of the product very popular in the in Malaysia? Murabah.
Murabah. Usually tawaruk. Tawaruk.
In Indonesia, it's very popular is murabah because murabah is more easily.
Yes. Now we have a range, so they have this bursa to just instantaneously you have the buy and sell for three party.
Okay.
It's automated.
Automated, yeah.
So you have who wants to sell, so you don't have to actually go and find on your own. The bank don't have to go and find, so they just deal with bursa suksila. They want how much of financing or how much of deposit based on tawaruk. So that bursa actually does that for them. They would issue certificate. They have timestamp for the auditors to check afterwards. So that's how they manage that risk in terms of the riskiness of doing profit and loss activities. Just to share, my background is not on finance actually. I'm purely accounting. But then after studying in UIA, I think terjebak.
Oh, Doctor, you did your PhD in UAE?
Masters and PhD in IIUM.
IIUM, in accounting, yeah?
Yes, accounting.
Okay.
Pure accounting.
So accounting. So who's your professor, Doctor?
Noraini, Professor Noraini.
Prof. Noraini. Oh, I met Dr. Muslim.
Dr. Muslim Harsani.
Yeah, just Harsani and Dr. Ros Anissa.
Dr. Rosaniza. She's also in Islamic accounting.
Yeah,
Prof. Malia.
Prof. Malia. Yeah, Prof. Malia become Prof. Malia become my internal examiner.
Yeah. She's very cerewet. Right.
Prof. Malia, adjunct professor, am I right?
Yes.
I think adjunct professor in
last time she was in this audit firm. She's a Syariah consultant on the part of Syariah audit. One of UIA students' business. Abang Salihin Associates. Last time I think she was the adjunct professor in UIA, but I forgot the duration, how long she's there.
We look like a gathering for the alumni.
Yeah.
Okay, next question.
Another student.
Next question.
Right.
Sister, next question.
Rahmi, I think Rahmi raised her hand.
Rahmi.
All right, Rahmi, please ask your question.
Ini question draft sendiri ke ada orang kasih? Rahmi, okay.
All right, thank you. Yes. My name is Rahmi, and my question is: do Islamic banks actually apply Islamic principle completely, or only some of the transaction, or what?
Islamic bank
actually apply Islamic principles completely or not?
That is a very sensitive question. You're asking, the Islamic bank truly apply Islamic principles, right?
Yeah, correct. Truly, they are follow with the Islamic principle.
Yes. They follow based on the contracts. Okay, they have to follow based on the contract. So the contract is a proof of application of profit and loss, if they use profit and loss, or they have ijara. But in Malaysia, when we do our accounting, because we follow IFRS, we look at the substance. Even though there is multiple contracts involved, like ijara, we have leasing and also sale at the end, ijara tuma al-bay. It's a series of contract, but in substance, it's financing. Because we're looking at the function of Islamic bank when they obtain their license, is a financial intermediary giving financing. How to show that they are being Sharia compliant? The Sharia contract execution. When we go and audit, let's say if you're doing internal Sharia audit or external Sharia audit, we would be looking at the documents. How is it executed? That is a proof of complying to Sharia principles. Okay. And we can't say the bank did not comply with Sharia compliance just because they charge a certain profit rate, but that profit rate is based on the whether it is leasing, whether it is murabahah or tawarruk. And in the financial statements of the Islamic bank, like in Malaysia, Bank Negara, they actually ask all these banks to disclose what sort of Sharia contract that they use. That is in the notes. So the financial statement would look similar to a conventional bank, but in the notes, they would disclose what are the contracts that they use for financing or deposit. So they will explain mudarabah, musyarakah, how it is being practiced. And then they also have for Islamic bank in Malaysia, they also have card loan, interest-free loan, usually given to their staff. Okay, this is like similar to the caliphate times. They also give financing to people who have difficulty in terms of for marriage. They want to get married. So from the caliphate time, they also give interest-free loan. So for the banking side in Malaysia practice, we also have a statement of card loan. Whatever the bank gives interest-free loan, how much they give out, okay, and how much are being received back. And they also have to have a statement if, like I said, if you remember in the previous slide, transparency, disclosure is a form of ibadah. So this Islamic bank, they have to disclose. If they're involved in non-Sharia compliant activities, they have to disclose what are the activities, what is the amount they dispose to charity. So they have this statement of Sharia non-compliant sources and users of fund. And this should be approved by the Sharia committee. They should not keep that Sharia non-Sharia compliant money that they earn or income inside the bank for so long, they have to dispose to charity. Okay, so those are the things that if we do an audit, those are the things that we audit at. How to calculate zakat, how do disclose, or disclose in the financial statements. How is it being calculated? Is it based on internal document policy, or based on, like in Malaysia, we have Jabatan Agama Islam tu, okay, so they have regulation on how to calculate zakat for banks. Okay, for banks, for takaful, but it's tricky because bank is tricky in terms of how do you classify current and non-current. Okay, because zakat is on non-productive aspect, right? Zakat accounting. So that is how they practice. So they need to disclose more. I think, in our opinion, from the researchers in USIM, even though the financial statement looks similar to a conventional bank or conventional insurance, additional disclosure should actually help to tell people this how I abide by the Sharia principles. Okay, that is how we do in Malaysia. We follow IFRS, but we still do all the Sharia contracts, and we need to disclose to the users, okay, the shareholders, investors, and so on. Is that clear?
Yes.
That is how we do in Malaysia lah.
All right. Is there any question more?
Any question? Anything else, everyone?
All right. The question from
Aziza.
Araya. Okay. What's your question, Araya? Sorry, Aziza Asa Araya, your voice didn't heard.
Araya, you are still muted.
Can you turn on? Oh, now muted already. Still mute. Okay.
Sorry, Araya, your microphone is still mute.
Okay, already. No. You can tell the question, sister. Oh, off again.
Or she can type in the chat. You want to type your question in the chat area?
Maybe you can write down on the chat platform. Chat.
Yeah. Please write down your question in the chat, Araya.
Prof. Abdurrahman Abdurrahim is still in USIM, Doctor.
No, he's the Vice Chancellor in another university now.
Oh.
University Polytechnic Mara.
Mara.
He's the first Vice Chancellor there. So he's not in USIM. The last time he retired. So recently appointed last year or early this year as a Vice Chancellor. University Polytechnic Mara.
Polytechnic Mara.
Tomorrow we have an event with his subordinate. They are giving a talk on ACCA.
ACCA.
To our students. They also provide funding. From Mara is the institution that for education, for financing, for Bumi Putras.
Oh, Bumi Putra.
Yeah.
So this is the question: what is difference between interest in conventional bank and the profit sharing system in Islamic bank? Isn't it the same as retribution for being a customer? Retribution. Maybe the contribute there.
Oh, contribution. Yeah. The difference.
Yeah. So
in a conventional bank, because like in Malaysia it's a parallel system, so the interest rate and the profit rate is quite similar in terms of percentages. How the Islamic bank justifies it as a profit rate, they have this calculation. I think actuaries to do the calculation for the ijarah rate, for the profit rate. So it is quite similar, but it is not interest, because for conventional bank, that rate actually defines as earning money on money. But for Islamic banks, that rate translate into, if it's a murabaha, the profit rate, the cost plus. Okay, like for ijarah, that rate would be the rental rate. So some people would say, there's no difference. It is still the same rate, but the rate actually, how we justify for Islamic banks from what from the practice side, that rate to be earned as a profit for the bank, they have to do or execute the Syariah contract. They actually earn that as a profit. By calculation wise, I think it's about similar in terms of actuaries, because they have to be at par. Otherwise, people won't invest or save in Islamic bank. They will go to the conventional because they have to be at par in terms of the rate. So you can see that sama saja, is the same. What's the difference? The execution of the Syariah contract. How they calculate using actuaries. I'm not that expert in how the calculation, because you would be looking at time value of money as well under finance. So if you have
because the interest in conventional is mostly different actually, because the interest is just coming the number coming from the just now you said money. Yeah, money divided by money, something like this. But if profit sharing, we are talking about what the transaction, for example, so 1 million or 2 million. So from the 2 million, so you how much?
Mudarabah.
Yeah,
but it has to be comparable to the conventional side. Otherwise, if the so the profit sharing like 60-40, but then 60-40 on the amount of profit earned, but not a fixed percentage. So that is the main difference. Because I was talking about the for the fixed rate like murabaha, ijarah is a fixed. So you can see it's like interest similar to that amount. But
because
then
if murabaha or maybe ijara, at some time we can negotiate with the bank, so how much we can give the profit, for example. But at some time the Islamic bank, they already have the list of installment. So for example, if you want to pay, for example, you need the money about the maybe 1,000 ringgit Malaysia. So after you need to pay about, they are using the general like so we cannot say that. So that's why at some time we have to negotiate because the transaction of the murabaha, meaning that, or maybe tawaruk, something like this. So this is different. Or maybe ijarah. So we cannot just put the number, follow it with the list of the installment. We can so need to negotiate.
They don't actually allow us to negotiate, so it's like similar to conventional bank. We just follow the repayment schedule. So is it really justice? Is it really equitable? So like from Prof Shahul, remember Prof Shahul Hamid? He would say Islamic banking is not Islamic at all.
So that's why I mentioned many times to my student that Islamic bank in Indonesia, at the same time we can say that they are not fully using the Islamic principle, but at the same time they are trying to do the best for the Islamic principle. Maybe implement the Islamic transaction, but it's better rather than never.
Yes, so that's why I cannot. It's very tricky question. I'm trying to be democratic and be positive of the existing one, but for academic purpose, there are arguments saying that Islamic bank, Islamic finance nowadays. That's why they were researched by Iqbal Mirako. It is debt based, similar to a conventional. It's not fulfilling all the maqasid. You don't take care of the usually like we need to transcribe, we need to agree, but then we can't agree. We as a depositor or receiving finance, we just have to agree with all the installment amount. We cannot negotiate if we don't have money. Yes, we can go and do restructuring and refinance, but still we have to pay more as
I still remember when I was in Viva, because the examiners of asking me about this issue, how the implementing Islamic bank, Islamic principle in Indonesia. So I said it's not fully. How come? Still making debate.
There's a debate because sometimes people can say it's just documents. You're compliant by document, but in secara raw, soul is not there yet.
So that's why. So I say that in Indonesia or maybe another country in Malaysia also, there is the Sharia Supervisory Board, and sometimes Sharia Supervisory Board, they not follow what the regulation have in Islamic bank. They only meeting, but I don't know. We don't know what the meeting discuss inside, because many meeting, if no discussion, no issue, so meaning that there is no point. There is the Sharia Supervisory Board. So actually, if you look at from the theory, Sharia Supervisory Board is always day, or maybe not very month, once per month. I think they need to check again the transaction, make sure that they are follow the Islamic principle, they are follow the Islamic guideline. So all need to check again. But in practice, they are only meeting, but we don't know. This meeting only for the just meeting, sorry, because requirement from the OJK, because we have the OJK, Otoritas Keuangan, regulatory, or because of what? So need to check again with the position of Sharia Supervisory Board.
I think one of the statement from Tan Sri Muhammad Daud Bakar, all the Islamic finance system should be whiter than white. So a holistic compliance is not yet achieved at this point. It's just technical Sharia compliance. The technicalities on papers, and then you have proof on papers, but then the soul is not up to that extent.
So that's why as the academician, we need to give the more information to our students, to give the explanation, what the issue, so how to mitigate some issue in Islamic bank, or maybe our student, maybe after they are graduated, maybe they improve in Islamic bank or become a regulatory staff something like this. So that's why we need to give more
the first step because it takes time to change, like the banking system, like 30-40 years up to this stage. So it's challenging, but I think our students can be the impetus for change, inshallah. Dakwah kita as a lecturer.
Okay, anything else, everyone? So there is Dr. Azalia. We can share a lot. Ada lagi yang mau tanya? Silakan. Apakah cukup paham semuanya? Terus okay?
Oh, ini kelas doktor 22 orang saja ya?
Yeah. International program.
Okay, international program.
This is international program, but if we involve with the regular program, I think more than a lot. We have a lot of regular program rather than international. Only one class international.
Only one class. Okay.
Yeah.
So guys, do you have any question more? So if there's no question again, I would like to go to the next session. All right, I will go to the next session. Is closing. Thanks to Dr. Nurazalia Zakaria for the very attractive material, and also Mr. Bahrul Ilmi for joining this general lecture. Hopefully, it can help the audience to have a better understanding of Islamic accounting. Now, we are turning to the last agenda, which is closing. As the master of ceremony, I do apologize for any mistake during this event. Finally, I say thank you. Before leaving this event, please everyone turn on your camera because we want to take a picture.
Okay, take a photo, everyone. Switch on your camera, please. Okay, take a photo, everyone. Switch on your camera, please.
Please, everyone, turn on your camera. Ready? 1, 2, 3. Once more. 1, 2, 3. Once again.
Once again.
Yeah. 1, 2, 3. All right, done. Thank you everyone for joining this event and see you on the next events. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Dr. Azalia. See you next, inshallah.
Yeah, inshallah. Inshallah, we will see again.
Inshallah.
Can I have a copy of the photo taken as well?
Okay, sister, give the photo to Dr. Azalia.
I think I was contacting with the rep through WhatsApp. Okay, thank you so much for the opportunity. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you, everyone.
Thank you.